Well, the SGX Nifty is now up about 61 points, so we'll have a gap up. Now, let's see how that sustains. Yesterday, the market bounced back from a very important support mark, 10,700 thereabout, and 10,692 to be precise, but 10,700 clearly is a big support now. Prakash Diwan is with us. Prakash, good morning. Thoughts first on Yes Bank, yesterday's top gainer. Clearly, a lot of shorts got trapped.
Yep.
You reckon there's some more?
Yeah, I think, now the fact that there are two very clear names that have emerged and it seems like a distinct two-horse race, and, the market also would respect the fact that the process is happening within time. So you could probably finish this off, the selection, the finalization could get announced in Jan and the next couple of months for the transition. So logically, all the negativity that was there in terms of the potential headwinds, unfavorable headwinds, could probably be out, and that's where people will have to rush. And look at the way private sector banks are generally largely getting re-rated upwards. And so, you can't keep Yes too long. You can't keep Yes out of that race.
Okay. Prakash, hi. Good morning. Wanted to discuss this slowdown in China and the impact that it could have. I mean, we keep talking about Tata Motors and how every other market is recovering but China. And now we know, the auto industry has fallen in 2018 after many years. You think this is going to be a protracted period of slowdown for Tata Motors? Fresh leg?
Tata Motors, China is a big piece in its overall scheme of things. And we've seen, in spite of the positive changes that they're trying to make within the Indian market, nothing much has happened, and China is the only thing that could move the needle for JLR. But having said that, there could be a little bit of this Brexit issue that could get out of the way, and that will bring a lot of clarity for them to start expanding into other markets. Right now, they are in a freeze of sorts in terms of their decision making. Whatever news flow comes is only negative. There's nothing positive about what they earlier outlined in terms of the capex, the expansion and all that. So I think Tata Motors, unfortunately, willy-nilly would get linked with the Brexit outcome. And once that is out of the way, you could probably see a little bit of positivity come back. But till then, generally, the auto market itself is on such a slowdown. This could be bad for all of us. It's for not just Tata Motors, but it could be for the entire value chain. So, and even the leaders like Maruti are struggling. So it's not that, it's just the guy at the bottom who's the one who's, kind of crying the most. But I think it will probably extend itself into another 6-12 months easily.
Any specific auto anch or someone that will be hurt by this Chinese news Sonia's talking about?
Oh, lots of, right?
Anybody who specifically services the Chinese market?
You look at the likes of Motherson, Sumi and all, which is what you could play.
But they serve European markets, don't they?
Yeah, but cars which would be fed into China would have
in America,
the US market listing linkages. And, their acquisitions haven't really paid off. The last 2 years, whatever acquisitions they made was significantly higher in terms of valuation, with the hope that this would continue growing. There could be an impact on some of these global players, but what looks like happening, Lata, is that, the entire automobile universe is getting reset towards EV and hybrid vehicles. So the IC to EV is what is actually the accelerator. And wherever that is happening, this slowdown is hurting the players much faster. And especially in Europe, if you see the BMWs and the Mercedes, sales, very clearly that's the trend which you need to catch. And I think very soon we could also be looking at more EV than ICs.
Okay, so from automobiles to aviation, your thoughts on Jet Airways? Of course, destroyed quite a bit of wealth over the last 6 months, but yesterday was up 16%. How do you approach this one?
Yeah, so I was actually reminded of this whole thing, this trend in the last 1 year, Anuj, where certain players in the leadership role, whenever there's an announcement for them to move out, the stock does well. 5 years back it was the reverse. You had people leaving and the stock would get hammered. So that situation is quite interesting. And when the jet flies beyond this 15-16% of an upside, I think again, because it's in a band, it really doesn't capture the true picture of what's happening in terms of the build-ups. But my sense is this could probably be the last boarding call for anybody who wants to look at the company in terms of acquisition, be it the Tatas, be it Etihad.
What's worrisome is Etihad's financials are nothing to write home about.
They've never been very strong, and for them it's more of a global play. And if you see, Etihad was always interested in the international connectivity that it could give to India, you know, and link it up. So look at the way today Indigo is trying to expand itself. It's going to Turkey. It's going to, you know, using Turkey as a gateway to Europe. It could probably do the same thing with Asia as well, and with some other player. So I think that's a market that everybody is wanting to. Domestically, there's no shortage of growth. Yeah. It's just a survival that you need to be assured of.
But the question is, would you buy Jet now? Because, you know, until March, I think by March they have a 2,000 crore repayment to make. So there is an expectation that some deal will get stitched through up until then. So would you buy it now?
So, you know, very clearly Jet has become a very simple binary trade. You know, it's 0 or 50, you know, 0 or 100 or whatever. So if you buy today and if there is an acquisition that gets announced, yes, it could see a lot of momentum come back, and if it's a stronger player, it definitely would have takers. But I really don't know whether I would buy this at this time, because the markets are not supportive. Otherwise, you know, the setup is so weak. And Sonia, remember one thing, February we have this Mumbai runway closure, which is something we are undermining. The number of flights that take off and land at Mumbai, for Indigo it's very large. And then that could mean that in spite of everything being in place, you're so efficient, fuel is in your favor, but you actually have no runways to land and no flights thereof. So that's going to be a significant dampener. There's a repair that's happening on one of the junctions on the Mumbai runway, and we are anyways constrained for space there. So real estate on the Mumbai airport is going to be a critical dampener. This is starting in February first.
It's always the case with Mumbai.
Yeah, absolutely. No, even on the airport, yeah.
So something or the other is always happening on the runway. But anyway, we should have pre-opening rates anytime now. The first rate, of course, would be quite good. The SGX Nifty was indicating that we'll have a good start. There's a freak rate in HDFC Bank, so that's, of course, leading to a bit of a lower rate. Currency, by the way, is quite interesting.
Okay. Yeah, sorry.
Yeah, currency has opened. Yesterday was a big decline day on the rupee. Today, at least, it's reclaimed some of that. Not a lot, just about 0.1%, but yesterday was quite
There was a seminal weakness in the dollar index. Of course, the dollar index measures the dollar versus the majors, but then its weakness across majors would be a bit of a sucker for the rupee as well. But yeah, clearly there is a bit of a recovery from yesterday's slightly inexplicable kind of fall. It was because of the Chinese trade data that all Asian currencies fell, and we fell in tandem.
Okay, a couple of more stocks. Jet Airways is up almost 10% in pre-opening, so there's some follow-on buying that you're seeing over there. Zee Entertainment, ahead of its numbers, is also trading in the green. There is an expectation that the numbers would be pretty decent. Revenue growth of about 15%, profit growth of 30% expected, so keep an eye out on that. And a couple of other stocks, Avenue Supermarts, let's see how that one's faring after the big gash yesterday. There is a bit more in terms of a slide, so down about 0.2%. So keep an eye out on that. ICICI Securities is also the one that would be reacting to its numbers. So let's see, weak numbers there, down about 1.5%. But Prakash, quickly your thoughts?
The weakness of the trade refuses to go away. I mean, there's a 1% cut. Okay, now it's behaving itself. The HDFC Bank is completely distorting everything.
Okay, so we'll wait for that rate to settle. For now, I think the more believable rate is the Sensex rate, which is up 0.3%. But Prakash, wanted your thoughts on D-Mart?
Yes, Avenue Supermart.
I mean, at any point, I know now it's a stock that everyone wants to stay away from, but at any point, does it become a buy?
Oh, it does. It certainly does. So, it's like this is not an accident. The margin compression that happened and which was announced day before yesterday was part of a strategy that they have adopted. They said we are looking at higher footfalls, significant revenue, this thing, because at some point in time, economies of scale will matter. And this is if there's any time to get market share built up, this is it. Because when you have a lot of other players coming in, and what's going to change margins, compare it to last year, is a bit unfair because you had the GST and the demonetization impact giving you that delta last year during the same quarter. So the margins looked much higher than what they otherwise would be on a normalized basis. And today, DMart Ready, which is one of the biggest, innovations that they have come up with, is something that they are really working on, and that would, once that starts thriving and getting up to scale, I think the margins will come back significantly. So my sense is, this is a reaction that when the guy in the class who tops doesn't score well on a particular subject, you really feel sad for that. The teacher really pulls them up more.
No, but he has been rewarded with 75 times PE.
No,
so
that's
you can't have space for 2%
But this one-off thing,
margins.
in one quarter, if that slows down relatively to last year, I don't see why people have to start getting off the counter so significantly. So yes, I mean, whoever had to book profits, it also needed an excuse to a trigger to book profits. Yeah, and that's happened with Aisha, that's happened with Page, that's happened with Maruti. All these heavyweights haven't had their share of triggers to book profits. Maybe this was the one for DMart, but it would definitely bounce back.
Actually, the bond yields have opened higher. Yesterday, when we closed, it was 7.43. Today, it's opening at 7.46. So bond prices have fallen. Clearly, the market has chosen to read, at least in the initial tick, they've chosen to read the negatives in the CPI number, which is the core inflation number. But I must warn you that we saw a big rally in bonds from 7.5 to 7.43. So technically as well, maybe people were so long on bonds that it's a little difficult to buy now in spite of the good CPI number.
Oh, yes. ICICI Securities, by the way, is down 7% after those numbers. So nothing kind of stock, of course. Listed below par, and after that down 44%, and it looks like perhaps there's some more decline. So that's not looking good. Now some rates are correcting. There was free rate in both HDFC Bank and ICICI Bank. I think ICICI Bank has corrected. HDFC Bank is still a bit soft. Wipro, which will be considering a bonus issue, is up 2.5% in pre-opening. Any thoughts on Wipro, Prakash?
Yeah, so a bonus yet again is always positive, but the fact that it's not participated as much as the other bigger players have does give you a little bit of comfort that it could, anything positive, especially revenue from the consulting side, could make a big difference, because you've seen margin contraction for the other players, which may not be the case or which may not get mirrored so identically in the case of Wipro. So I'm quite positive that Wipro could probably surprise with the numbers this time.
We have a bond expert joining us, so I just want to ask where bond yields are headed. MS Gopikrishnan, head macro trading, South Asia and India at Financial Markets, Standard Chartered Bank, joins us. Good morning, Gopi. Thanks much for joining. Bond yields have now gone to 7.47. How would you read the inflation number? Did it not prompt a rate cut expectation?
I think inflation number, if you see the expectation was roughly 2.4% before the WPA was printed last afternoon. And we did see a fall in yields yesterday in the morning session by 3 to 4 basis points on the fall of oil prices. However, after the WPI print, I think the expectation went through the roof, and in fact, people have started talking about below 2% print.
Yes.
And of course, from there, it's a disappointment that it came as per the original expectation. So the excess expectation is getting reversed. You all know that core inflation is holding on, and also if you see transport and communication, in fact, the core inflation has shot up to roughly 6%. So I think people are reading into those numbers and thinking whether there would be a rate cut or not. At some stage yesterday, the swap market had priced in a 50% probability of rate cut in February itself. Probably that's scaling back a little bit. So I think overall that is the reason why bond yields have gone up.
What is your own expectation, Gopi? I mean, is there enough fodder to consider a rate cut?
I think, I'm on the camp that there should be a rate cut, simply because low inflation number has been seen for quite some time. And one cannot keep waiting for more data to come before one does a rate cut. So I think a 25 basis points rate cut seems to be, fair to have now. But of course, after that, one has to wait and see whether food inflation is sticking lower, or is there a risk of food inflation coming back? So that is definitely required. But bond markets are more concerned about the risk and stuff like that, I think, which has been discussed in detail.
Yeah. So, actually, I was going to ask you that rate cut apart, how would you expect bond yields to move in the next, run up to the budget?
See here, globally, high yields are looked very favorably since January. So after the Fed, the kind of paused on rates and an expectation of Fed even cutting rates, which seems to be on the extreme side, but even assuming Fed holds on to the rates for the year, the expectation on emerging market bond yields coming lower and interest in emerging market bonds have increased. Unfortunately, India, though one of the high yielders, has not benefited from that, simply because there's a concern around the fiscal deficit and the quality of fiscal deficit. If we don't see flows coming in, and we are all dependent on the OMOs to continue for yields to go lower, and my own take on OMO is that probably there's going to be slowdown in Feb and March, because the large OMOs are not definitely justified in Feb and March. Probably, I think it can be extended to April, May, because there could be deficit coming in April, May. But the size may not be necessarily the same size which we have seen in the past. I think there could be some disappointment there, and yields probably will go to 730 if there is a rate cut. But for it to hold on to that, we need to have fresh investments coming from the foreigners. The local banks are not buying enough. The credit is picking up slowly, so I don't think there is enough.
Okay, no. So up to February 1st and up to February 5th, February 1st budget and February 5th monetary policy, what is the range?
It's going to be a volatile period. So it's a 5-day period, but I think budget could be reasonably negative. But I don't think they're going to come with a deficit number which is going to be very far away from the 3.3%. So it's all the devil is in the detail, right? So I don't think too much should be read into that. But yeah, markets will read into it, and I think yields can move up by 5 to 10 basis points then, and probably if there is a rate cut, another 5-10 lower. So we are talking about 730, 7.5 range. If I can respect.
By the way, the currency is seeing a decline once again. The sort of gap has been sold into, and the dollar is getting stronger now. Gopi, your thoughts on the dollar-rupee pair? We're making a move towards 71 rather fast now.
And why such a big fall yesterday?
Yeah. So dollar-rupee story has been simple. We have not had enough inflows since January. Usually Jan is good. Jan is a good month for FPI inflows, both in equities and debt. It does not happen. And the usual demand for dollars are there. So it has to be met by either foreign portfolio investors or large FTA inflows. Both have not happened. I think it's just demand pushing it up. And it stayed there, and we think RBI did supply a little bit of dollars to support it. However, when dollar moved yesterday higher, and I think that's a time for dollar rupee to move higher.
All right, Gopi, thanks a lot for your time.